Well, good day, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday evening. This is the 7th of February, and this is 2023, 5:24 p.m. Central Time. So tonight, we'll be getting the State of the Union, but today it was all about listening to Fed Chair Powell being interviewed and then the fallout from that one way or the other. I personally heard him say very clearly the Fed's going to have to stay higher, longer. And that when asked, and it was an interesting question, started off by David Rubin saying, well, if you had known the jobs data was coming out with 519,000 jobs, he said, increase, would you have, instead of 25 basis points, gone to 50? And the whole audience started laughing. And of course, he demurred on that. He didn't really answer it one way or the other. And the market took that as a big negative. And with that, as the interview is going on, the stock market was going higher. It then reversed course after the interview. And then about 2 o'clock, the market started coming up again, and it just kept going higher, and the day ended up in a positive note. Now, tonight, the market's rethinking it, coming back down. So this is the equivalent, in my parlance, of having two moves back-to-back that are like FOMC meetings. What we got is the information that the Fed is not happy with the jobs data. They're happy with the inflation falling down. But the jobs are presenting, especially, and he made this clear, service sector jobs are very, very problematic. He went on to talk about rent falling and things like that. I'll talk more about this in the financial update as well. So, obviously, you look to see what did the dollar do on that. Well, the dollar didn't gain on that news, which was interesting in itself, too. And you did see something of a rally happening tonight, at least, in the euro and the other markets. Be careful in stock indices. Take a look at both your weekly and daily charts. You're approaching upper Bollinger Bands, and that's often a problematic area. In the gold market, this did not light a fire under the gold market. We are up for the week about 0.5%, 0.49, and just sort of hanging right here. As you can see, when I say it didn't light a fire, I think my grammar is right on the money there, just sort of laying down. You have a pattern of a higher high, a lower low. That is not a trend. The market is staying under the 18-day average, so the bias is down. You have lower moving averages at 1812.60 and 1793.20, so that market could go down there for the support. But more likely, it's going to fight the battle right here at the Bollinger Band. Getting down to these lows will not be an easy task because your bigger support of the Bollinger Band is right there. Does it mean it can't happen? No. But I'm not seeing anything to make gold go from 1875 into the 1812.60 level just yet, especially when I look at a market that's oversold. Now, if this were to convert to being embedded, where the blue and the red lines are going sideways under 20, then I could change my mind. But that's, it's not there. When we look at gold, silver's still losing to the gold market. And silver has what we call that gorilla glue trade. It's when the market locks onto the Bollinger Band and stays there. Now, it's been 3 days in a row under the band. That gives the market, the way that I count this, a 2% chance of staying under the band for Wednesday. How do I come to that? My rule of thumb, it's all it is, but it's worked very well for me, is that I count consecutive days under the Bollinger Band, especially in futures, as each one taking away one of the 5% of the time the market will stay under or over a band. So the more it stretches itself out, like right now, I give the market a 2% chance, which means 98% chance it's going to try to move to the right-hand side of the band. Just gives me a wherewithal. It does not mean go out and buy the market. That's not what it does. It's also an oversold market down here. If it wants to stretch it out, it might be able to get right here from the Bollinger Band to the 100-day average as a logical sequence. But again, we're not seeing buying from China yet. No real news there. And you see that in the copper, which isn't doing more than bouncing off its lower Bollinger Band in an oversold condition as well. When we come to the platinum market, again, I think you've got a market that's making a decision. Does it want to embed? So embedding means you have to have 3 days under the lower band. Now, for that 3 days, you cannot count the day you're in, Wednesday. You got to go back and see, has it done it already? So you certainly did it on Tuesday. You did it on Monday, and you did it on Friday. So you have the embedded reading. So it's a two-pronged attack that you look at. First, the odds are that the market on rallies will get sold now, looking for it to come back down, probably closer to the 100-day average than the lower band if it gets up, let's say another $10, something like that. If you get the red line to close over 21, then I think the market, instead of just a bounce, will keep going back to the 18-day average and knock out the downside momentum. Right now, the bears are totally in control in that market. It's very different in the palladium. In the palladium market, first you're oversold, you're correcting, and you're getting a bounce. That's all that you can call it. In the dollar index, I think you're very overextended. The tendency of the dollar is not to stay under or over the Bollinger Band. It's a big currency trade. Traders pay attention to that. I think the odds favor it's going to try to fall back. So you put it all together, you get a game plan. I'm going to point out two things to you. If you want, you've got to learn Bollinger Bands. They're so important, and they give you what the market is doing, the objectives. That's one way to look at it. And when they lose with the slow stochastic, their momentum, it gives you the idea the spring's going the other way. The other thing I want you to do is pay attention to the special report that I've got out right now. And this one is on gasoline. Now, you can trade the ETF. There's a large ETF for gasoline. I think it's called UGA. And that will work just as well as looking at the futures because it's based on the U.S. futures. So it's a proxy for it. You can work with it. And I talk about the seasonals. Now, this report will be on just another 48 hours on our website. Then it comes off completely. So if you're going to look at it, do so. How do you go see it? It's pretty simple. You go to our website, it's under the word research, or you can just move your cursor up here. There'll be an icon, give it a click, and away you go. I'm Ira Epstein. I'll see you in the morning. Have a good day.